Hello and welcome to this Forex Preview at xm.com. We'll be taking a look at the upcoming Bank of Japan meeting and the outlook for the yen. I'm Maria Pashivardis, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, so far the Bank of Japan has refused to even consider raising interest rates to support the yen, which is still under heavy pressure. Can you tell us why direct intervention in the FX market to boost the yen has not worked, and whether we can expect any policy shifts at the upcoming meeting on Friday?
Hello, Maria. Certainly. So let's start with the FX intervention. It hasn't worked because it doesn't address the root of the problem. So you already touched on the actual problem. The real problem is the widening in interest rate differentials. The Bank of Japan is not doing what everyone else is doing with rate increases. That means that American interest rates, for example, are going higher, but Japanese interest rates are staying flat, essentially. So that naturally draws capital towards other nations. So money is leaving Japan is a very easy way to put this. Now, when you try to intervene in the currency market to address this, you are not fixing the problem. You are putting a band-aid on the problem. So it might delay the trend, but it won't change it. So the analogy I always use is you can slow down the bleeding, but it's not really going to heal the wound. So that's what has been happening so far. Now, what's likely to happen this week? Well, nothing really. That's a short answer. The Bank of Japan remains committed to what they have been doing so far, and their line of thinking is inflation is running at 3% right now in Japan, which is relatively high, but they are arguing, look at wage growth, look at inflation expectations. Those remain muted. So that means the Japanese economy is not really producing inflation. This inflation wave that we are experiencing right now, that's global. That's a supply chain sort of issue. And that's going to fade away. And we might be back battling deflation before long. So they don't want to adjust policy just yet. And it looks like we are not going to get any material changes at this meeting either. I doubt they are going to change anything at this meeting. But if they do, what we are likely to get is some minor changes in language. So what they might say is, we are open to adjusting policy in the future, but they are highly unlikely to actually do anything.
Right. So what's the big picture for the yen? What would need to happen in order for us to see a trend reversal?
Yeah, so a trend reversal, so let's start with the obvious thing that the trend remains negative, right? Even if they change tone a little bit, as long as they are not actually acting on that, it probably won't be enough for the market. So the yen remains in a downtrend, and currency interventions are not going to change that. It can slow the bleeding, it can delay what's happening, but it's essentially delaying the inevitable. Now, what might cause a trend reversal? Well, we would need to see either of the following two things. Either the Bank of Japan pivots and they signal that they are willing to raise interest rates, or the Fed pivots because some recession, for example, hits the US economy and they start to slow down, and that also helps to compress the interest rate differentials that have destroyed the yen. Right now, it doesn't look like either of the central banks is ready to blink, right? The signals that a shift is coming would be, for the Bank of Japan, keep a close eye on wage growth. When wage growth accelerates, and we haven't seen that yet, but when it does, that will be the early signal that the Bank of Japan is ready to pivot. For the Fed, it will be inflation. We need to see a very significant cool down in inflation before the Fed can even consider a pivot. And we are not there yet, so it's difficult to argue for a trend reversal just yet.
Marios, thanks so much. And thanks for joining us for this Forex Preview at xm.com.